Hey Anupam, I think we are live. Um, let's hope everyone's video is working great. With that, over to you, Anupam.
Thanks, Mondi, and a very warm welcome to everyone who's joined and taking time out of their day. I really appreciate it. First of all, I'm glad that you this with IIA and BCG. Full insight and also very specific to this. So it's my pleasure today to host this panel. My name is Anupam. I'm the senior partner at BCG. I have a terrific panel here with me, so let me just start by introducing my panelists. And perhaps you can just raise your hand when I pull out your name. So first up, Arun Balakrishnan. He's the founder and chief executive of Exceedance, which is a global insurtech providing products and services to the industry. Since launch in 2013, they've grown to 15,000 insurance professionals, serving 85 insurance clients from 7 offices around the globe. And prior to that, Arun was based in India. He was the CEO of Berkshire Hathaway in India. Exciting role as well. Welcome, Arun. Next up, Anand Datta. And Anand, just raise your hand. Thank you. Welcome. Anand is a venture capitalist. He's currently working with Nexus Venture Partners. As you know, is a very prominent VC in the region. They've got investments in projects like Clover, Turtle Mint, Onsurity, and so on. Prior to this, Anand was heading Asian growth markets. Was also the CEO of India and the Philippines in Bima, which is one of the most interesting and successful microinsurance platforms globally. So warm welcome to you as well, Anand.
Thank you.
Next up, I turn to Shiv Kumar Shankar. And Shiv is the chairman of Attributum Insurtech, which is a firm that's engaged in data management, AI, process automation solutions. Sure, is very hot these days. And she was previously the MD of LexisNexis Solutions in India. Is a very seasoned insurance professional. So welcome, Shiv.
Thank you.
And finally, Jitesh Shah. Jitesh is the managing director and partner at BCG India. He's one of the co-authors of the report. Feel free to reach out to him later. He works with financial institutions in India and overseas. And that includes Insurtech. So that's our panel for today. I'm excited to have them. What I'm supposed to do is pose a question or two to each one, and then later on, time permitting, some questions that we can have perhaps everyone comment on. We begin with you, Arun, since you're up at 6:30 in the morning based out of the U.S. Thank you for joining. So first of all, the report it has lots of rich insights on the many great insurtechs. There's a lot of experimentation, there's a lot of growth around the world in the insurtech space. Having said that, the route to scale and stability is still less certain and less clear, right? Your unique vantage point of straddling the West and the East, having some US experience and India experience. My first question to you is, which insurtech business models are you most excited about as you look around the globe?
Thanks, Anupam. Firstly, to all our listeners as well, if you hear crying babies, so please excuse that. The point you mentioned is quite valid. I mean, there's a lot of insurtech innovation happening across the world, and we see a lot of interesting business models come up. But in my opinion, the scale or profitability issues are a result of the right business model, right? And I think as long as any insurtech conforms to the three basic tenets of insurance, I think it'll be sound. So first is insurable interest, right? So you can feel some of the parametric insurance products flirt the boundaries on that, right? Then there is adverse selection. So it could very well happen that only the high-risk people buy your product, which, if you think about some of the pay-as-you-go auto insurance business models, you only turn on when you're driving on a cliff and you switch it off if you're going to office, is kind of fraught with that as well. And lastly is moral hazard. So if easy device and content insurance is available, you just toss off your phone, right? So if you look at these three tenets, I'm yet to see all of them being applied successfully in every insurtech, or at least even being thought about, right? So yeah, coming to your question specifically, I think some of the really good business models out there, I think have taken these into account. And one of these innovations is actually from I like quite a bit is a Paris company called Wacom, right? It's driving the whole insurance business model as a license as a service. So you can really go to their platform, use APIs to create any product you want. You can directly tie into your customer base, sell it. They're pinging some 10 million API calls a week, right? So excuse the sound as you mentioned. The other business model I think Anand here is there. I mean, I really love is the Bima Mobile. I mean, if you think about how they've gone about, penetrating the mobile reach and for health insurance and how I think it's it's quite relevant even in the context of a market like India, right? So, in short, I think what India also needs is a great adoption of the affinity business model, as they call it, right? Not all so there's a very interesting thought process going on about how you can adopt just because you have a massive customer base, let's become an insurance company, right? That we see a bit of that. I remember a quote from my college professor, right? He says, if I have a rope I should get a cow, right? I mean, I don't think that applies with insurance companies. So I think how you can tap into your consumer base is if you have the right insurance companies working with you to create affinity products, new customized products, which can be then delivered to them. So anything which caters to the basic three tenets of insurance, as I call it, and a good distribution model with a very low expense ratio. I mean, I'm not talking rocket science, these are the basics of the business. But if we do this, I mean, there are quite a few good examples out there.
Turning from sort of the global view, Arun, to India specifically, I mean, are there some particular models that you see are very relevant to the India situation, as opposed to sort of, what you might be encountering in the US? There's no shortage of jugaad innovation in India.
I think in India, my personal view is we are still very nascent compared to the world stage when it comes to product innovation, coverage definition, or creating policies which can really matter. Right? I think enough time is not being spent on it. Having said that, there are some new insurance companies which are really trying to adopt a good channel strategy, come up with that, but it's in the context of personal lines. Now, let's think about what's the biggest economy drivers in India. It's the services companies, right? The IT services companies, BPO service companies, analytics, all that. None of these businesses, including us, we can't work on a world stage without the right E&O coverage, right? The right professional liability coverage. These products and the wordings of it still are very basic, right? I mean, these have been adopted by some certain standard Lloyd's policies and things like that. But if you can adopt that to create these products for the insurance for the Indian economy, I think there are a lot of takers. That's just on the commercial side. Yeah, if you there are other things which are coming up, right? If you look at Amazon, how it's so spread out in India, suddenly the seller in Kanpur can export his goods on Amazon to anywhere across the world, right? He needs the right protection for his business, for all his needs. If somebody catered to that and created a good customized product, you have people out there. So, I mean, to answer your question specifically, Anupam, I think the Indian market's needs are evolving, right? We are becoming a very big global power, right? I think the insurance companies need to keep up with that. I mean, it's not about getting access to every product to our Indian customer. I think we need to take the step up to design the right kind of coverage in India as well, right? So, still a long way to go, I think, but there is a right intent going on everywhere. I think there's a disproportionate focus in India around distribution and getting it in the hands of the people, which is understandable given our penetration. But I think the goal is not to just put any insurance product in the hands of people, right? I mean, it should be what they need, how it can solve. So I think there's still some way to go for us in that front.
Thanks, Arun. That's really useful insight. Turn to something finance. We are the large VC community. Many of these ventures. Anand, the report points to over $6 billion in global VC funding to Insurtechs over the last 5 years. which is a very large amount. Mainly, it's gone to general insurance companies and secondarily to B2B companies. That's the global view. In India, that number is running to about 300 million, of course, growing every day. So my first question to you is: in India, do you see the greatest amount of activity and funding for insurtechs now in terms of spaces, geographies, types of business, and going forward in the next few years?
No, absolutely, Anupam, and thanks for having on the panel. But what Arun was saying, right? Like West has a different problem than India. West is penetrated, and insurance is that therefore in a certain way commoditized, right? So it's a war on pricing and other things, and now the game that's happening on West is towards personalization. You see players like Lemonade or you see players like Root, Metromile, who are taking the license, creating the balance sheet, and that's where the amount of funding and the IPO and the money that is going on is very different. Versus India, the challenge is more around access itself. So right now, a lot of education and access is happening. So most of the funding in India till now, what has happened, and now it's changing a bit, is more towards distribution. So you'll see the policy bazaars of the world coming up, you'll see the cover fox of the world coming up, and all. In the new age one, over the last couple of years, what you'll see is that what is happening is that if you compare to banca, what used to happen in insurance, it was because there was a pool of customer and there was a payment methodology and there was a data. And only thing that used to need to flow was the information. Now there are other digital pools which are getting formed. If you think about Ola, for example, Ola runs its own insurance and it has all the plans to have an insurance license also in future. It has a pool of around 30 40 million people, and these people have there is a channel of payment going forth now. It has belief, and now it has to play out. Of course, a lot of venture capitalist money is towards beliefs and moonshots in which we want to make it work. That it can behave same as banca, and if we can have the insurance just as the license and the underwriting part on the other side, the distribution channel can just pay it out over there. So in India, whatever you have seen, the most of the money, VC money going through, you'll see in multiple different innovation and distribution. Whether it be like we have, for example, in short, put money in on surety, which is towards taking healthcare benefits through employee benefits. Because in US and West, you'll see most of the health insurance is covered by the employers. In India, it's not so. In India, there is a missing middle because in the top, people like us, we have an employer health benefit, and in the bottom we have the Ayushman Bharats of the world. But in the middle, people who are working with SMEs and SMBs are not covered at all. So these are the sort of innovations which are India specific, which are distribution specific, which actually a normal incumbent insurance company is not ready to do because in their unit economics, it's just not economical to do that. There will see technological breakthrough trying to make insurance more accessible, and those are the products which are becoming more and more popular and money is flowing in. That said, couple of people have taken a full stack approach. So people like Apple and Digit, you will see taking full license and trying to say that if we can be direct to customer, there is more of this profit pool or the revenue pool that we can capture, and that is the benefit which tech brings in, and thus we do not need all the middlemen and this 30-40% going out in the distribution. Also on the claim side, like if you are doing vehicle, if you are the first port of call, then there is a lot of the claims benefit that you can manage and a lot of profit pool can be captured over there. So that's another where you'll see a concentrated amount of money going in.
I see. I mean, at the other end of the spectrum, there's relatively few exits, right? I'm sure there are many insurtechs and aspiring insurtechs that are listening in today. So what are the routes over time for exit that you see for Indian companies in the next few years?
Yeah. So we would like to believe, see, one thing we have to put in context that the entire Indian startup ecosystem or the Southeast Asian startup ecosystem is new. The amount of exits that has happened in the US or Europe has not happened in India, barring a few and this is the first year actually when you will see, like in our fund itself, we have seen 5-6 exits either through M&A or even in IPOs, whether that be through SPACs in the US or the others. So that action, that motion you will start seeing in India right now. Probably Policy Bazaar will be the first out through the doors, and most likely through an IPO. But you will see a bunch of, and the good thing here is that, see, in financial services, we know that the balance sheets are very high with the large incumbents, right? So the path to exits through M&A and some of these companies taking fruit. So, for example, in Bima, Allianz was one of the largest investors, right? And then these sort of motions we will definitely start seeing. For example, in settlement right now, Mass Mutual has come up as an investment. So we will see a bunch of strategic investors coming in. There will be exits through that, but some of these companies will become very, very large and will go for IPO as well. That's the way we are seeing.
Thanks for sharing that, Anand. Appreciate it. Let me turn to Shiv for a different angle. And Shiv, the report clearly points to data-driven, AI-enabled business models as the future of Insurtech. And you've worked on an insurance repository across life, motor, health in India, a very exciting space. So my first question to you is, what are the biggest opportunities specifically in India that you see big data and analytics? And are there some concrete examples you would point to, spikes or game changers in this area across the value chain?
Thanks, Anupam. And I think in today's environment, I think where insurance industry is in today, still we are looking at the low-hanging fruits out there. And while cost control is still the biggest driver for many insurance companies, and that too from an FWA perspective, fraud, waste, and abuse perspective, I think the dominant usage as we go ahead, and the biggest opportunity that too would be where in the area of customer acquisition and underwriting, be it life insurance or PNC, and I think that's where the dominant usage is going to get to, and that's also something that the regulator is also having a challenge today, right? I mean, Arun rightly pointed out adoption of the affinity business model is not the only thing, and how do you put together the entire, you've got a list, and how do you put together the entire thing to ensure that the penetration actually happens. So this is a challenge that insurance companies are grappling with, and the solution actually lies in making the entire process simple and insurance actually more easily accessible to the consumers. Let me quote a couple of examples where actually this became a game changer, right? I mean, today the amount of data that you ask a customer in an insurance application form itself is becoming a very challenging exercise, right? And this is where, and particularly from my past history, what we have seen is that if the insurance company through repositories is able to populate a bulk of the data about you, I mean, it's not that the insurance company doesn't know about you, right? I mean, insurance, they know about you. It's available in the repositories. Your risk information is available in the repositories. If you're able to populate things about you, it not only adds to the convenience of the entire process, but at the same time, if I were to know much more about you, either from an external data source or from the repository itself, things like where do you work, the distance between your house and your office, the route that you would take from your house to office, the traffic density in that place, the accident density in that place, things like this make things easier for the insurer to underwrite a business, and it becomes a win-win actually both for the customer and for the insurance company. Quoting another example, actually I saw this example in the report too, and this is from a health insurance company. It's about 6 years back or 7 years back, there was just about one insurance company in the country which offered products for the chronic people with chronic ailments, right? And most of it was reporting that was done on a manual basis. At the end of a month, you needed to report back with your tests so that your insurance continues, right? And today, technology is there, and I think we have solution providers who, and I think there's one solution provider also named in the report, a company called Beto, which provides actually details of monitors chronic ailments and provides details so that the insurer could at all points in time have a control over the ailment or the claim that is likely to come there. Arun was in his opening, in his remarks, had also mentioned about everything being led by personal lines of insurance. And I think let me actually cite one more example from a commercial line of insurance, and that too, the property insurance. And this is again an area where more mature markets have actually seen um, uh, a lot of penetration happening in small medium enterprises getting insured, things which are not getting insured. So insurer is today looking at two things, right? Experience and exposure to an insurance, the two sides of the coin. Experience is obviously available from your claim history. The exposure to many of the small medium enterprises is actually very difficult to reach out to. So this is where there are organizations which have now started providing the exposure data. So some of this have, so if I got a warehouse in Bhiwandi, I need to know whether in the last 10 years, how many times this particular warehouse has got flooded. So that kind of data is actually available at a geotag level. So these are some of the things. So if I were to summarize, I would say availability of data, platforms that resolve entities in real time across heterogeneous data sources, and real-time scoring engines, and these actually help in the real-time monitoring and value additions that can be provided to the consumer, and that's where actually you start seeing penetration increase.
And clearly, so the power of the data is enormous, but getting it and getting it in the right place that it can actually be used. What are some of the challenges in an India-specific context?
Yeah, I would need to actually take you back to 2000, at the time when the Indian insurance industry actually got privatized, and that's the formative years of post-privatization by the government. The industry was actually keen on capturing the known markets. I mean, people were fighting for the same market. It was literally the same channels and for the same pie. And in this race, actually, data took a back seat, and the processes actually evolved with the with a to cater to a very limited objective. But as insurance companies matured, and as penetration was not increasing and became difficult to penetrate into the market, and costs and risk mitigation efforts were not very effective, insurers actually started feeling the pinch for data, and the quality of the data that is available in became a big challenge. And I wouldn't say that there is no availability of data. Data is available there. Data resides in a huge amount of unstructured formats. There is a huge information overload with the insurance company, but actually no actionable insights. So keeping this in mind, it's not an impossible situation, right? I mean, today technology is available to convert some of those unstructured data, mine those data into actionable insights, and there are third-party data available, data sources which are available, which could augment the data which is available with the insurance companies. And I think as new areas of insurance are emerging, particularly things like crop insurance is getting into a new avatar, the weather insurance, and I think motor insurance, if the regulator permits, could get into telematics, pay by use models and things like that. And I think this is where the challenge for the insurance companies would be to actually build on correcting their old data, plus put together processes which ensure that in future the data that you capture is of a reasonably good quality. It would prove cost inefficient to start with, but I think over time it would make up for itself. So that's I think data quality, I think, is the biggest challenge.
Thank you. Let me turn to Jitesh as one of the co-authors of the report. Jitesh, the report lays out that the future of insurance clearly we will have both competition and collaboration between traditional insurers and insurtechs, right? So let's explore both of those axes. The first one, how do you see competition playing out from a starting point where clearly the incumbents are dominant while there are some vibrant upstarts?
Hi everyone. Am I audible, Anupam?
Yes.
Perfect. So the report distinguishes between two sets of insurtechs, if I may refer to that. There are B2C, or what Anand referred to as full stack startups, insurtechs, which essentially serve directly to customer, and in some parts of the value chain start to compete directly with the incumbent insurtechs. There are big examples in India which are predominantly in distribution, and Arun referred to some of those. But there are also other examples which initially started in some parts of insurance, mostly in distribution, and are now working backwards into manufacturing and full stack. There will be pockets of these insurtechs that we believe that will continue to exist, whether it is an Acco, Digit, or for example a CoverFox or Policy Bazaar. But if I look at the funding that has gone into insurtech space, there are over 27 investments that have been made, which are quite substantial in nature, which are predominantly in B2B category. They are small, and this is where we believe that especially given where the industry in India is, the insurance incumbents, predominantly have legacy systems, digital IT architectures, and data systems. Therefore, this large variety of capabilities will rely on these agile, nimble insurtechs, and which is where we expect collaboration will increasingly happen a lot more between the insurtechs and the dominant incumbents. And the report also lays out how we think the partnership will happen between the insurtechs and the insurance companies. And it is largely need-based, where Insurtech has a specific capability to offer, and the insurers are either behind or are catching up in that specific area. The 5 examples that the report lays out are very sort of few examples just to make it real. Incubation or acceleration of building capabilities inside the insurance companies, and we've seen global examples. For example, the AXA Insurtech incubator, which has incubated over 10 plus insurtechs. 2, for example, near home in India, where there has been a conversation where some large insurers have come together to discuss if, for example, we can create a joint incubator of insurtechs. It's still under works, but that's one way in which the insurers can easily access capability that's currently not available to them. On the other extreme, essentially, is where capabilities can be used almost on a pay-as-you-go, pay-as-you-need basis, where they do integration with a large number of providers. There are plenty of examples in India where a platform or a specific API can be just pulled from an insurtech on a need basis. And then there are a few examples in between, whether it is a partnership or a co-creation. And the examples are, for example, how some of the insurers have offered malaria insurance or a COVID insurance, where for a specific part of the value chain, they have gone and tied up with the insurtech or a distribution. And there are examples of numerous number of examples where there have been distribution partnerships. So all in all, we feel quite positive about how the B2B space will really integrate well with the dominant insurtechs, and select B2C insurtechs will continue to compete with the large insurance companies in the market, either for a part of the value chain or the full value chain, depending on the nature of the insurtech.
And what do you see as sort of the role of the regulator, in promotion of insurtech in general in India? Where are they, and where should they be heading?
So I think the first few steps have already been taken by the regulator in terms of facilitating the collaboration between insurtechs and insurers. The first one has been set up of the sandbox, on lines of the global sandbox that we have seen at whether it is UK or Singapore. India has also allowed for sandbox to be set up, which is the first good step in ensuring that the insurtechs and insurance companies can come together. There are a few other things that we think might be pertinent as the regulator takes a holistic view of the landscape. I think there are some guardrails around how much of equity can be allowed to be invested in startups. Today, that is currently capped at 10%. So as the market matures, and as large insurance companies start to specifically incubate and take equity positions, this rule might require a specific review. Similarly, for example, today there are guardrails around what an insurance company can do or cannot do, right? As again, some of the insurance and insurance partnerships, insurtech partnerships mature. Again, this is one such area that the insurance regulator might have to take a hard look at in terms of what an insurance. For example, today, if a health company wants to promote a wellness company, there are, for example, boundary conditions on what the insurance company can do or not, right? So as the use cases evolve, I'm sure regulator will be more than happy to take a look at it. But currently, there are hard and fast lines of what an insurance company cannot do.
Jitesh rightly pointed out, the regulator needs to be a bit more open about what insurance companies cannot do, right? I think, first off, I think at least there's a strong intent from the regulator to keep thinking about the ecosystem, which compared to several we have interacted with is quite progressive. Some of the execution of that might have to be questioned, but that aside, I think the biggest thing to be thought of is we always treat every insurance company needs to be like $1 billion enterprise or an LIC, or you're talking about that in the context of how it takes care of the policy holders. But take US for an example. We have some 7,000 plus insurance companies in the States. A very small one of them do actually, the $1 billion plus premium. There are several who operate only within a few particular states or few cities with only one specific line. So even small insurance companies can exist. And the insurance regulator needs to think about it in that context. And if you set up regulations to allow, people who understand, say, West Bengal and the needs of the economy there and Odisha, and create an insurance company which only caters to those customers and does a few hundred crores of premium or even lesser and is profitable, that's fine too, right? I mean, you don't need to have every insurance company to be in thousands of crores, right? So the regulator always thinks about the laws and this in the context of this. I think if you really want to drive penetration and drive this, we need to create a market which is much wider, right? And just one quick addition, because some of the question came up about B2B insurtechs out of India. I mean, that's one of the big challenges is you can't really just have India as a market because you have a very small customer base for yourself, right? And if you want to create products here which go out and sell overseas, that's a different thing, and we can address in Q&A. But connecting the dots, I think regulator needs to really think about creating mechanisms of promoting insurance companies or MGAs or these kind of things, which really drive up the number of these companies and risk-bearing entities much more than what it is today, right? Rather than getting them to increase penetration, if you just spread out insurance companies and allow the creation of SME businesses within insurance, I think it could create a different ecosystem for us.
Arun, you mentioned MGAs there. Do you want to just elaborate on that? That may not be as familiar.
Yes, I mean, there's a very, in terms of structure within the insurance ecosystem, right? Let's start at the top, right? You have the reinsurance, insurance. Then there is agents and brokers and distribution. But now there's a very prominent ecosystem in the US, UK, and Australia as well, where it's MGA, which sits right between a broker and a carrier. So essentially, 5 guys get together and say, we know insurance for restaurants like anything. We'll do all the functions of an insurance company, including underwriting, settling claims, everything. They just don't take the balance sheet risk. So an Allianz will come and give them their paper. The MGA does all the work of an insurance company, gets paid 25% and thereabout. The balance sheet premium and the losses is paid by Allianz. The rest, everything they have to manage. So that MGA as an ecosystem is a big driver of innovation all over the world. right? And if you see, and the reason why venture capital has made a big wave, I mean, none of the VCs and PEs wanted to put in, asset-heavy businesses like this with the low ROE. MGA is allowed to decouple that. That's why Hippos and the Lemonades and all came in, and when they got to a certain scale, they could take on the balance sheet themselves as well. Right? So MGAs is a very good player in the ecosystem, which is not yet there in the insurance ecosystem in India. I think it'll be a great one because it drives innovation, it drives entrepreneurship, it drives product creation, a lot of these things.
Right. I hear some beeping. Is that to warn us about time? If so, maybe we wind up with one final question before moving on to the lounge, which is really open to all the panelists. And this is, this report is going to be an annual publication, so I'm sure we'll get some rich insights each year on state of play. But sitting where we speak right now, 2021, what's your prediction for 2021 and beyond? What would be the biggest changes in the India Insurtech landscape, either the supply side or the demand side of the sort of follow on, and maybe we start with you.
I think we will see, whether for long sustainable or not, more of embedded insurance. We will see multiple different pools in which insurance will be embedded with other product and bundled and given out, be it like mobility or be it like even in some cases health as well. So that's my production, and that is what will drive a lot of penetration. So a bunch of embedded insurance and bunch of push from the government side on getting. We are already hearing with the new labor code, government is trying to work towards gig workers and other temp workers to bring them under the purview of employee insurance. How do they enable that? Tech will have to play a lot of role on that. So those two will be my prediction.
Jitesh?
I am actually quite excited about how digital is shaping insurance in India. It's already become quite large, and that coupled with some of the innovation that Anand spoke about will just make a lot of resonance with some of the personal insurance buyers in India. So that's one big theme, and the other big theme that I'm personally quite excited about essentially is the whole national health stack that the government has been working upon, which is basically to say how will India have a UPI equivalent for the insurance, and specifically health insurance to start with. That I think will be quite a game-changing and will take India much generations ahead of some of the other Western markets.
Shiv?
Yeah, I agree with both Anand and Jitesh, and I think 97, as per the report, 97% of the funding today goes into the B2C category, right? I mean, as B2C increases or penetration increases, if you need to sustain that, you need robust systems in place, actually, and particularly from a risk perspective, a risk and service perspective. And that is where you're going to see more and more organizations coming into the B2B space, and that's where the funding is also going to increase. Arun, I don't know whether I contradict
No, it's actually, in trends wise, I agree with most points. One thing I would elaborate there, I think there's a big talent pool in India, and insurance companies of the future are going to be data and technology companies. The talent pool in India is best suited to tap into that opportunity. So that itself, I think, would create ordinals of innovation and everything. And the other thing, and I rightfully agree with Jitesh, I think was mentioning, I think there's very strong incentives from the government or initiatives from the government to drive growth and penetration for the insurance in just within the whole country. And I think some of them would lead to a good opportunity. I think these two, in combination with all the other points which has been already mentioned, I think could really create India good hub for innovation for insurance in the future.
Well, great. On that optimistic note from all of the panelists, let me thank all of you for sharing your insights, and I hope the listeners got something rich out of it. Do read the report as well. And we now have an opportunity to connect with the panelists and with the IIA members. We'll be going into the lounge. And so I'd request Mondi to take over and switch us all out into the lounge tables for some further interaction.
Yes. I am going to switch everyone back to the lounge. Thank you, everyone. Let's meet a network on the session. Thank you.
Thank you so much, Anupam, for the great session. Thank you. Thanks, Mark.
Thank you.